Good morning. Thank you all for joining us for the Lytham Partners Summer 2022 Investor Conference. My name is Joe Dorame, Managing Partner of Lytham Partners. I would like to welcome Reeds Inc., ticker symbol REED on the NASDAQ. Presenting from the company are Norman Snyder, Chief Executive Officer, and Tom Spisak, Chief Financial Officer. Today, Norman and Tom will run through the company's slide presentation. Before we begin, Lytham Partners is one of the country's leading investor relations firm with more than 2 decades of experience. We've built one of the industry's most effective platforms for connecting small cap companies with high quality institutional investors. Hopefully today's event is another example of how we can add value. As a reminder, management will be available for one-on-one virtual meetings. If you'd like to sign up, please visit lythampartners.com/virtual and click the one-on-one meeting request button. Now I'd like to turn the presentation over to Norman Snyder, CEO of Reeds. Norman, please proceed.
Thank you, Joe. Good morning. It's a pleasure to be here. Reeds is a company with a rich history. The company was started in 1887, so it's been in existence for over 35 years. We initially started in the natural channel, that expanded into the grocery channel. In 1999, Reeds acquired the Virgil's trademark. In 2006, Reeds went public through the NASDAQ. In 2019, the current management team joined the company. And in 2020 through 2021, we expanded into larger growing categories through innovation. Simply, our strategy is pretty straightforward. It's top line growth, improve gross margin, and manage operating expenses. And you're going to hear that consistently throughout this presentation. As part of that strategy, we're playing in larger categories that are growing faster. We initially started in the ginger beer category, which is the smallest category that we're in, at $160 million. We've recently entered the ginger ale category, which is 10 times the ginger beer category, at $1.4 billion. And we're now entering into the alcoholic, ready-to-drink, flavored malt beverage category, which is $7 billion plus. We entered ginger ale, or launched our ginger ale line in 2020. We introduced our classic mule, and now we have a stormy mule with a soft launch in 2021, and we're rolling out across the United States this year. And then in the second half of this year, we're also going to introduce our hard ginger ale, and I'm going to talk about that shortly. And then we've also rebranded our Virgil Zero Sugar, and we'll talk about that separately as well. Ginger beer, which has had a mid-single digit compound annual growth rate over the last 5 years, is our initial category that we've played in, and we continue to outpace category growth. We hold approximately a 15% market share, and we have the most distribution within our portfolio. We've also recently added our cans to our bottle mix, which has allowed us to get to different channels, and I'll talk about our channel mix shortly in a little while. Ginger ale category, larger than ginger beer, as I said earlier, about 10 times the size. It's been the #1 growing category in the carbonated soft drink sector in terms of style and flavor. It's had about a 4% compound annual growth rate. We started in 2020, as I mentioned, and we've expanded beyond our natural and grocery channels into mass and Target and through our e-commerce. In 2021, we launched a couple additions to our ginger ale, which we call mocktails, Surely Tempting, and our transfusion, and are adding some new flavors later on in 2022, a lemon spritzer and a blood orange. This is our look of our ginger ale. We're in 12-ounce sleek cans and 4-packs. So it's a great looking package. And again, one point of major difference in all of our ginger products is that we use fresh ginger in every product that we make. None of our competition uses fresh ginger. That will use extracts or other flavors, but we use organic ginger sourced from Peru. The RTD alcohol and flavored malt beverage category, has really been capturing the spotlight over the last few years. They're on trend, they're all natural, and it's what today's consumer wants. So you could see the growth has been tremendous. I mean, obviously, flavor, not only just hard seltzers, but you have ready to drink cocktails and ready to drink wine, which has really been growing. And obviously, we believe it's a fit for us because we continue on our platform of ginger first. And again, these products contain organic fresh ginger. And this is a look of our, on the left, our hard ginger, which is an 8-pack variety pack, which has strawberry, watermelon, mango, cherry limeade, and pineapple coconut. And on the right is our classic mule, which is 7% alcohol. Going back to our hard ginger ale, we're 100 calories, 5% alcohol, 2 grams of carbs, and 0 added sugar. So again, quality products that are better for you with no added sugars. Zero sugar, as a category, it's grown just shy of 11%. However, in the all natural or the natural sector, it's more than double that growth. And again, we really try to separate ourselves through bold flavor and 0 aftertaste. We've converted to the sleek 12-ounce can, which I'll show you right here, in 4 packs, and we have 9 different flavors. Our flagship root beer, vanilla cream, black cherry, cola, orange, grapefruit, ginger ale, lemon lime, and our Dr. Better, which is a pepper flavored. We have national distribution throughout the natural sector, grocery sector, mass, club, some drug, and some convenience. We're in every major retail group in the United States in terms of grocery and natural sectors. You know, we're growing in both Whole Foods and in Sprouts. You can see every major grocery chain is covered here. We're also online through Amazon, Shopify, and Instacart. We have approximately 46,000 doors where you can find our product, and that breaks down into the following: 6,600 doors in natural specialty, over 30,000 doors in grocery and mass, drug 3,000, club 130, although that's growing. On premise, just shy of 4,000, liquor stores 1,500, and convenience stores 1,700. So over 46,000. You can see there's a big opportunity for continued growth in convenience stores and liquor stores. Obviously, with our ginger ale and our ginger beer in cans, it's been a great package for that. And then also growing on premise and club, we're expanding into both BJ's and Costco. This is just a snapshot of our top accounts, where our top 20 retailers comprise just shy of 90% of our revenue. Some of our larger ones are Kroger. That's Kroger in the aggregate, and we break it down into the various banners: Albertsons and Safeway, Publix, Food Lion, Wegmans. You can see Sprouts in there, Myers. So a great assortment of accounts, pretty spread out. But again, we generate our top 20 accounts generate about 90% of our revenue. Tom, why don't I turn it over to you to cover financial performance?
Thanks, Norm. So as you'll see from this schedule, Reed's has been experiencing healthy top line growth year on year. And we as a business, as we're focused on top line growth, we're also focused, as Norm mentioned earlier, improving margin and managing our operating costs. So we expect to continue to reduce our burn, which you'll see in the 2022 forecast that we've shared. Norm, could you just advance one? So this slide helps, I think, show a sense of what the market believes is happening with Reed's, which is Reed's is a stagnant business. But in fact, there's a lot of discontinued brands that sit within Reed's in its older day and its previous years. That includes things like private label for Trader Joe's and a number of other outlets, which we don't use any longer or sell any longer. So if you adjust that out, when Norm and I came in, which Norm made reference to late 2019, you'll see the growth in 2020 and 2021 is over 20% growth. And that's been a key focus of ours and will continue to be a key focus. But you'll also notice that on this slide, we make reference to the change in the team. Company culture, we find, is really important for driving a business like ours. You need to have everybody in the same boat with you, heading in the same direction. So we've changed over our entire organization, with the exception of about 4 individuals. to help us drive toward the growth initiative that Norm has laid out and toward that profitability. And if you take out the discontinued, you'll see that between 2019 and 2021, the aggregate growth is about 54% increase in net sales. And there's also the margin focus, which you'll see in 2020 going up. 2021 was impacted by inflationary pressures that we had. Obviously, everyone is experiencing that. We've seen it across the industries as they're quoted by experts. And you'll see competitive brands also having same challenges with cost increases. So if you could just advance one. So this is our 2022 forecast, and there's key building blocks. We've got 5 key building blocks that's laid out. Norm made reference to the hard mule and ginger ale, so we believe that's a big opportunity for this business. The Virgil Zero Sugar rebranding, where it's coming out in the slim cans, that's a big opportunity for us. We're in Sprouts already, and that brand is doing very, very well, and we'll be transitioning to within other customers as well as they bring it on and out of the standard can, which we had, which was more outdated and really held the legacy of the brand when it first came on board. Ginger ale, we're experiencing triple-digit growth, and we expect that to continue as we get additional distribution. And then this is a pretty interesting one, swing lids. So in the business, many years ago, there was this swing lid, which was Bavarian Nutmeg root beer. And we introduced that back in 2020 was the first year we brought it back. And I was like, we need to bring back something fun to make this brand engaging for consumers. So that brand came back, Bavarian Nutmeg, in these 16-ounce swing lids. But we've also introduced butterbeer, we've had that. We've just put it into this Flying Cauldron as a swing lid as well. And what's happening with that brand is when we launched it last year, as a follow-up to the first year of launch, we had customers actually buying it before we even had it in produce. So we were using up the allocation we had already planned to make. So a big opportunity for us there this year. And
In
also,
addition, it gave a lift to our bottle and can business. So it really created a lot of excitement among consumers. And not only, as Tom mentioned, it was pre-sold before we made it. It really lifted the entire brand.
and the last one that I'll point out here is Reed's ginger beer cans. So Norm made reference to that. He was talking about the distribution opportunities we continue to have, but we've gained distribution in both mixer sets and liquor stores and continue to see that as an opportunity with our Reed's ginger beer cans. So this
let me make one other point, Tom, that I missed earlier. We've been able to expand our distribution outside of the craft or natural soda set, especially set, by getting into the mixer with both of our ginger ale and our ginger beer in a can. So that's created more sales opportunities for us as well.
Norm, can you just leave it on the other one for just one moment? So the other thing we're focused on is margin improvement and driving that. So supply chain is very important for us, and optimizing how we get our ingredients and inputs to offset the inflationary pressures that we're seeing, that everyone's seeing. And in addition to that, we are targeting our spend very specifically so that consumers that are getting our marketing, advertising, digital, have the ability to go find that product, and we're not sending them chasing to empty shelves. We're also leveraging e-commerce, as Norm mentioned earlier. So if you look at the current top line sales between 2019 and 2021, we've more than doubled across each of them, whether it be total Reed's brand, or Virgil's brand. And we expect that performance to continue with the relaunches that we just talked about on Virgil's and the exciting opportunities we have in the Reed's brands. If I flip over to distribution, you'll see that each of our brands has gained significant distribution. We've gone from 31 to 42 on the total business. And then for Reed's and Virgil's, they've also grown significantly, up to 39% on Reed's and up to 31 on Virgil's. And if you look, turning to velocity, you'll see that our velocity has improved significantly from 6 units per store per week, up to nearly 10 across the portfolio. And then on Reed's, up from nearly 3.9 to 7, and from Virgil's from 3.9 up to 4.8 units per store. So strong growth there, and we continue to focus on that initiative as well, making sure that the velocities that on these brands continue to grow through focused efforts of the sales team and the marketing initiatives that we put in place. So Norm, I'll turn that back over to you.
Thanks, Tom. When we look back from the time that we've taken over, we've had, as you can see from earlier slides, really strong top line growth, continued margin growth, and expense solid management or expense management. So when we really look at 2021, we continue to hit those, but we encountered headwinds because of supply chain issues and inflation. But if we look from earlier slides, we increased our retail coverage through ACV. We also expanded our DSD network to accommodate some of these RTD and flavored malt beverage products that we're coming out with. We've successfully launched all of our innovation, going into larger categories and really hitting consumer trends. Our ginger ale is out, our rebranded Virgil Zero Sugar is out, and our hard ginger ale and mules are also out. So we're really pleased that we've stayed on target and continue to both innovate and meet current consumer demand and with on-trend products. You know, we talk about supply chain, which has really been our biggest challenge recently, and not, as Tom talked earlier, not dissimilar to what other companies are facing. But what we're really focused in on is reducing transportation costs, really solidifying our network, bringing down cost per case, being more efficient, getting orders out faster, increasing payloads, which we've done largely because organically we're selling more cans than bottles. We've gotten better with purchasing our ingredients and our packaging. We've really looked to optimize our formula, so we're minimizing or combining ingredients, so we're not having to purchase a lot of different ingredients, but package them all in one. Tom talked about culture and improvement and staffing improvements. We've done that and really worked to I think better face today's supply chain environment. And I think we've really done a good job of fortifying that and really addressing how to operate in today's day and age and the challenges that are out there that, quite frankly, no one really sees abating in the short term. We look at how the momentum that we've carried over in 2021, and this is really a summary of everything we've talked about. You know, we've made investment spending in our network and our sales infrastructure. We've recently taken pricing similar to all other companies in our category, really looking to maintain minimum margin thresholds, using cans successfully, which has been a very popular package these days. We talked about staffing and culture, what we've done, the transportation, which I really addressed in the prior slide, by being more efficient, by establishing minimum order quantities. You could still see that we have a few things left that we're doing, that we're aggressively going after, and really improved our margin performance, which is critical in today's day and age. And, you know, the focus is really continued top line growth, which we believe with our brands that will continue to do that, you know, and we're seeing that as we, you know, almost hit the halfway point to 2022. We're really excited about our past. We're really excited about this year, but more importantly, we're excited about our future, where our products are going and our ability to execute. Any questions, you can reach out to either Tom or to our investor relations. We're available after this for one-on-one meetings, and we look forward to connecting everyone and to continue the discussion on rates. We appreciate your time. Have a great day, and we look forward to seeing you soon.
Norman and Tom, thank you very much for your time today. We greatly appreciate it. Again, if you'd like to sign up for a one-on-one meeting, please visit lythampartners.com/virtual and click the one-on-one meeting request button. We wish you all a good day and enjoy the conference.